Ladies and gentlemen, good day and welcome to the earnings call of Konstelec Engineers Limited for the financial year ended 31st March 2025. The floor will be open for questions once the management presentation concludes. Please note, today's call is being recorded and may include forward-looking statements based on current expectations. These involve risks and uncertainties that could cause actual results to differ materially. The company is not obligated to update such statements except as required by law. Listeners are advised not to place undue reliance on them. Representing Konstelec Engineers today, we have Mr. Bihari Lal Ravi Lal Shah, Chairman and Managing Director, Mr. Amish Bihari Lal Shah, Whole-Time Director, Mr. Jigar Dhiresh Shah, Whole-Time Director and CEO, CA Hardik Sarvaiya, Chief Financial Officer. Without further delay, I now invite the management to share a brief overview of the company's performance and provide insights into our operations. Thank you and over to you.
Good evening and a very warm welcome to our esteemed investors, analysts, and stakeholders. We sincerely appreciate your time and interest in joining us today for our earnings call for the financial year 25. Before we dive into the detailed presentation, I would like to take a moment to reflect on the past year and the road ahead. Financial year 25 has been a year of both challenges and transformation for Konstelec, strengthening our capabilities and unlocking new opportunities for innovation and growth. A major milestone in our journey was our entry into T&D sector, reinforcing our market presence and demonstrating our ability to adapt to evolving industry dynamics. This expansion, coupled with our continued focus on operational excellence, positions us strongly for future success. Over the years, Konstelec has emerged as a pioneering force in the EPC sector, delivering advanced solutions in electrical instrumentation and automation systems. As a licensed electrical contractor, we have consistently prioritized quality, safety, timely execution, and cost effectiveness. Our global footprint has expanded steadily, beginning with our establishment in Nigeria and more recently the incorporation of foreign joint venture entity in the Kingdom of Saudi Arabia. This move marks a significant step in our regional expansion efforts, unlocking market opportunities in MENA, thriving the EPC sector. The JV aligns seamlessly with our broader vision of leveraging transformative development under Vision 2030, particularly in infrastructure, energy, and industrial growth. Konstelec is committed to unlocking tomorrow's potential through innovation and sustainable solutions. Renewable energy projects, water treatment solutions to railway infrastructure, data center development. We continuously strive to drive excellence across industries. During the financial year, margins were impacted by execution-related challenges. However, these were operational and transitional in nature, rather than structural or temporary, allowing us to address them effectively and ensure foundation for future growth. We have proactively navigated challenges, taking decisive steps to strengthen the stability and accelerate the growth. Our recovery is progressing as planned, and with the momentum steadily building, we are well positioned for a strong turnaround in this financial year. Resilience, strategic execution, and we remain committed to delivering long-term success with sustained value creation. Today, we will walk through our performance, key development, and strategic outlook. Our objective is to provide clear insights into our direction and reaffirm your confidence in our long-term commitment to value creation and sustainable growth. With that, let's begin with the presentation. We've already introduced the company. We have built a strong reputation as an innovative leader in the EPC segment in electrical instrumentation and automation. Our expertise spans a broad range of industries, allowing us to address complex challenges with precision efficiency. Leveraging advanced technologies and highly skilled workforce, we consistently meet the demand of diverse projects. Our clientele includes industries such as oil and gas, refinery, steel, cement, pharmaceutical, textile, hospitals, healthcare, FMCG, paint, defense, nuclear power, and space, amongst others, both within India and abroad. Focused on sustainability and industry advancement, we actively pursue opportunities in renewable energy, data centers, smart cities, and industrial automation. Committed to stay ahead of industry trends and maintaining a competitive edge, we continue to be a trusted partner for clients and investors alike, delivering value across all stages of project execution. These are our key numbers. We have past the 3 years, 3 decades of execution. We have completed 200 plus projects, 70 plus ongoing projects. Our market cap remains at 127. As on 21st May, we have 900 plus workforce. Our revenue for second half of last year has been 109 crore, ROE of 4.93% and ROCE of 9.13%. Our values, vision, and mission. We are driven by, we build trust and integrity through transparency and accountability. Through teamwork, we harness collective strength to achieve shared goals. Our commitment to customer satisfaction drives everything we do. We ensure quality and reliability in every product and service we deliver. Our vision is to establish global leadership in EPC industry by delivering innovative and high quality solutions in electrical instrumentation and automation. Our mission is to provide safe, reliable, and innovative solution in EPC industry, consistently exceeding customer expectations, to foster a secure and supportive work environment for employees, to prioritize client satisfaction throughout project execution while ensuring exceptional value creation. These are the milestones. We began our journey in 1997 until this year, 2025. I'd like to highlight a major milestone is our breakthrough in T&D sector through an order received 55 crore in RDSS. Services we provide, project management, procurement, engineering and design, construction and commissioning, and operations and maintenance. This is our execution process. I'd like to skip this slide. Or expand a little bit on expansion into the T&D segment. As highlighted in our previous presentation, the company expressed a strategic intent to expand its presence in T&D sector. We are pleased to announce a significant milestone in this journey. We have been awarded a contract by AVVNL, that is Ajmer Vidyut Vitran Nigam. The project is development of infrastructure for segregating the 11 kV mixed feeders. The value of the project is 25 crore and the timeline for the same is around 18 months. This marks our successful entry into T&D segment, further reinforcing our commitment to diversify and scale our operations. The company remains focused on exploring and securing more opportunities in this domain. List of our clients, our esteemed clients. Our geographical footprints, as you see across India, we are registered in most of the states and are actively working in many of the states. We also have a presence. We also have a presence in Nigeria, and recently we've done a JV arrangement in Saudi Arabia and are looking forward to get more and more business from the same. some of the highlighted industries which I've already mentioned: oil and gas, textiles, paint, chemical, nuclear power, cement, T&D. Credentials, accreditation. Again, the investment highlights, we are advancing rapidly into the Saudi domain. I'd like Mr. Jigar, our CEO, to highlight some of the possible projects and the venture that we are getting into.
Good evening to everyone. Just to give you a brief on this journey to Saudi, it was a process took almost a year where we identified a partner and we moved forward looking at the strategic location and what kind of projects we are expecting. We are working more towards the province of the western coast of Saudi Arabia to start with, where SABIC, Sadara, and other bigger industries like Aramco are present over there. And Our partner whom we have selected has presence in instrumentation. Their strength is in substation automation, instrumentation works, and they are doing a lot of works over there for these kind of companies. And they were also looking for a partner who can associate and have a similar line of working. So we have taken this step forward, and now this year the JV is in place. And now we are looking at various projects and various, orders that we can secure in the coming financial year. So the process of the JV has been completed, and now further details as we move forward. We are looking at the market in a very positive aspect with the kind of projects that Saudi Arabia is doing in terms of like we have Make in India, Make in Saudi is going on. So a lot of industries are coming up in Saudi Arabia currently. And also there was one more significant milestone which we have taken this year. All our offices are moving under one banner, and we will have a very good corporate office where the staff will be moving and giving us a good footprint in this EPC business, and also a presence for our clients and for our employees and everyone.
Thanks. Industry overview. As we all know, EPC presents a huge potential for project people like us to deliver. So the sector has a potential of 4 trillion annually by 2025, and the demand for E&I is on the rise. The transition to renewable and integration of smart technologies like IoT and AI are further driving the growth. We are glad to participate in this growth and are doing our best to keep up with the market trends and ensure that we play an active role in the growth in the EPC segment. So in the last presentation or the last time that we met, our focus was in these 6 segments. I would like to just highlight on some of the inroads that we have made across each of the sector. For renewable energy, Konstelec has submitted bids as a developer for solar projects under PM Kusum scheme in the state of Rajasthan. We are expecting to sign the agreement with the DISCOM in the first half of the financial year. As a part of the program requirement, we will enter into a tripartite agreement to lease land for the project, which will be initiated upon finalization of the contract with the DISCOMs. This initiative reflects our strategic entry into the renewable space and aligns with our long-term growth plans. Also, one important development which has happened is we received one order from Reliance Industries for electrification of PV factories. We are exploring similar works with other PV manufacturers of large scale. Point number 2, water treatment. In the current financial year, we are taking a more measured approach towards the opportunities of WTP and STPs. Railway infrastructure, we have Konstelec has the necessary PQ credentials to bid for railways metro development projects. We are currently in the process of finalizing an MOU with the JV partner to further strengthen our PQ profile. With this collaboration, we are optimistic about securing our first order in the railways sector within this current financial year. For the data center projects, we are actively pursuing the opportunities as an EPC contractor specializing in E&I for data center projects. With increasing demand for high reliability infrastructure, we see a strong potential in this segment and are positioning ourselves to serve the leading players in the space. Maintenance contracts in refineries, as all planned expansions of refineries are being commissioned this financial year, many of them are coming under maintenance contract. We are actively looking to expand our expertise to these new refineries. T&D segment, government has already unveiled 9.5 lakh crore worth of initiatives to strengthen the national grid infrastructure and enable interstate energy evacuation, especially in renewable rich states like Rajasthan, Karnataka, Tamil Nadu, and Odisha. In the same segment, we've already made a breakthrough by securing a job in RDSS valued at 25 crore in the range in the state of Rajasthan. And we are looking forward to more similar jobs in various other states. Brief profile of us: Mr. B.R. Shah, myself, Amish, and Mr. Jigar Shah. Brief numbers. Total values of orders under progress 720 crore. Unexecuted portion of the order remains at 389 crore. The total value of orders received in last financial year is 231 crore, and the value of orders received in the first quarter of this financial year is 35 crore. This is this is the revenue breakup by industries. As you see, 60%, around 60% of our revenue is from refinery, its associated project, 13.7% from steel, and 25% from other industries. Oil and gas, oil and refinery forms a part of the oil and gas industry, which include upstream and downstream both. About the numbers, P&L statement, I'd like our CFO, Mr. Hardik, to highlight certain numbers and performance in last year.
Good evening, everyone, and very warm welcome. So, in financial year 24-25, we have clocked our total income at 195 crores, vis-a-vis last year 217 crores. And the PAT numbers we have achieved is 4.74 crore, vis-a-vis 8.92 crores. And this is a summary of a balance sheet, where you can see we have a significant investment as a capital work in progress for our new office furnishing at Mumbai office, and the rest of the details are there.
There had been a margin pressure in the financial year 24-25. We've identified these areas and are actively working towards this so that they are not an hindrance in this coming financial year and in the next years to come. There were a few projects which got stalled and subsequently cancelled due to factors which were beyond our control, something like land acquisition problem from the client side, and the bottlenecks they had while getting their approvals. So these projects incurred substantial fixed cost across manpower, machinery, and logistics without having any corresponding revenue realization. As most of these were governed by PSU contracts lacking escalation clauses or damage recovery, mechanisms, we had to absorb the full financial impact. There are few projects that are under LSTK mode. So these LSTK modes, there have been some projects where there have been approval delays from the clients. So the approvals which have not come from, let's say there are drawing approvals, there are other project related execution approvals which had not come, which had led to the dip in the revenue which was expected last year. Third point, there were large number of projects which were nearing completion. So last year, there were certain projects which were covered 80 to 85% of the project was completed last year, and whose unbilled revenue, extended timelines and delayed closure of these contracts led to higher input costs during the period, which put pressure on the margins. Many of these issues are temporary and execution based, not demand based. And they are all temporary in nature, and they are a part of the project business. Sometimes we have to face these kind of situations, but they do not occur very frequently. So not all our projects are under these kind of problems. For this coming financial year, our turnaround strategy, we've already seen a lot of projects which have neared completion, which have completed 85%, so which will be completed with minimal cost, which will lead to direct positive impact on EBITDA margins. There are certain full-scale execution projects secured under latter part of financial year last year or early part of 25. Most notably, AVVNL, Reliance, and Cameroon have now been entered under full execution mode. These are expected to significantly boost the revenue in this financial year, backed by our consistently strong execution capabilities and an even more cautious and detail-driven approach to project delivery. Point number 3, our entry into the new geography, expanding into new markets remains a key priority, both to drive revenue growth and diversify operational risk. In line with this, we recently secured a prestigious international order from Pristine Limited in Cameroon, marking our entry into Central Africa. Simultaneously, our recently incorporated JV in Saudi is gaining traction, with ongoing engagement in the region showing promising long-term potential. As already discussed, we have already forayed into RDSS projects by securing a 25 crore job. Another job of Reliance for solar PV factory. On the renewable front, we are exploring other solar project opportunities at selected locations in Rajasthan. If these prospects materialize as expected, they hold strong potential to contribute meaningful revenues in this financial year. While financial 25 presented a unique set of challenges, it was a year of learning, recalibration and repositioning with a healthy order book, strategic diversification, improved execution and a clear vision to revenue realization. We are poised for a robust rebound in this financial year. Our commitment remains unwavering to deliver sustainable growth, improve profitability, and create long-term value for all stakeholders. Thank you. Thank you for your time. Closing remark.
Thank you, sir. We'll now begin the question and answer session. Participants who wish to ask a question may please raise their hand. Alternatively, you can type your questions in the Q&A tab below. We'll take the first question from Mr. Miten Shah.
Hello, am I audible?
Yes, you are audible, sir.
Yeah, thanks for giving me opportunity, and thanks for conducting this con call. So my first question would be like we are now venturing into a new area like Cameroon, right? And we are also located in Nigeria as well as Saudi Arabia. So my question is, how does the company take care of hedging in forex? You know, because there will be a lot of forex related issues related to this. So how does it take care due to the fluctuation in forex?
When we bid for this projects, we have taken care of the hedging part where that contingency has been accounted in the bid. And whatever revenue realization will happen through the medium of secured payments from LCs. So that way we are secured in terms of when these projects move to ground once all the engineering and material is delivered. Exchange fluctuation that is taken care during bid stage. Just hardly exchange fluctuation is mitigated by hedging.
And also about the foreign exchange hedging, we are actively looking after the hedging part wherever the possibilities of the foreign exchange fluctuations are there more and more. We are actively participating in the hedging part.
Okay, fair enough. Okay, and also, I see that the debtor days, have increased from 118 to 126. So, is there any plan, that can be reduced again with respect to the previous year and even lesser than that? I mean, that would probably improve the cash flow, correct?
The data days that have been increased marginally during this financial year is mainly due to the slight delay on the recovery part. I would not say more, but slight delay, and more of the billing in the quarter four part. Quarter four, we have excess billing, highest billing in the quarter four. That's why there is a slightly increase in the data days, but that's not a long term. There is not a full year part.
Okay. And can we just know what is the financial impact of Konstelec High Tech as we believe it has been write off as indicated in the statement?
The Konstelec High-Tech JV has been incorporated in 2011 for a specific project in a Chatco, where Konstelec being one of the JV part and High-Tech is the another JV part. So that work has been completed in the 2018-19 or so. So the JV has been kept it live because of certain ongoing tax assessments and were there, which were completed in this financial year, and now any recovery is not possible in the JV. That's why we have write off those investment in the books in the current financial year.
Yeah, how much is that basically?
47 lakhs.
Okay. So
Yeah.
are there
So
any?
we are in
Got it.
process to break down the JV.
Correct. So are there any other JVs or subsidiaries like that, which affects the consolidated statement?
No, right now, recently we have incorporated JV in Saudi Arabia. So, but since the operation has not been started yet, so we have not incorporated in this current consolidation. We will be actively having the consolidation in the first half of the financial year.
Correct. And my last question as of now, I'll give a chance to others also to ask questions. So my last question as of now would be like, how much percentage does Nigeria constitute to the consolidated statement?
We don't do any consolidation of the Nigeria part because Nigerian company is our associate enterprise, not a subsidiary or a joint venture.
So it does not get reflected in the consolidated statement?
No.
I mean, so I mean, what is that we are reflecting? I mean, we are indicating in the presentation. Then I'm not clear about it. Sorry.
We are indicating in the present and the Konstelec EPC Nigeria is our associate enterprise having a presence in Nigeria.
So project, they are giving business from there to Konstelec India. So we do not have any direct holding. Konstelec does not hold any stake in this. It's a
Common promoter holding.
So it's a common promoter holding company. All the business that comes, we are having Konstelec has the potential to get business from Konstelec Nigeria.
Okay. So revenue that is derived from that does not get reflected in the consolidated statement. Is that correct understanding?
So we have not, there is no any revenue, there is no revenue generating that is reflected in the contract balance sheet from the KPL EPC Nigeria Limited. Although that company may help us getting a business directly from the Nigerian client.
Okay. No, I understood, but the only thing what I didn't understand is, no, I mean, then what is it that is reflected in the presentation? I mean, then.
In presentation, we have reflected being the KPL EPC Nigeria is the associate enterprise having a common promoter holding.
Okay. And does not fall into the.
It doesn't fall into the joint venture or a consolidation criteria.
Okay. Fair enough. Okay. Thanks a lot. I mean, thanks a lot for answering all the questions. I'll wait for a while. If in case I get opportunity, I'll at least as of now give time for others to ask. Thanks a lot. Really appreciate.
Thank you. We'll take the next question from Mr. Niket Shah. Niket.
Hello, am I audible?
Yeah, you're audible.
Yeah, hi. So I wanted to ask you, could you just go into a bit more depth regarding the order book? Could you tell me the breakup, like which companies have given the orders or which sectors are the order belonging to?
We are not able to hear you, sir.
Am I audible now?
Yeah.
Yeah, I wanted to ask about the order book. So could you give me a bit more detailed breakup as to which sector or which companies have given the order and the order breakup in that regard?
We can offhand, we don't have, we can send you the details, but the largely the order breakup of 389 unexecuted portion is across oil and gas, steel, cement, paints, and other similar industries. That is the unexecuted portion. However, we can share the complete details with you.
Sure, sir, that works.
Yeah.
And also, I wanted to ask about the joint venture in Saudi Arabia. Have you all received any orders, or like, is there ongoing orders that you all have not disclosed or anything in that regard?
Just to answer your that question, in Saudi Arabia right now we are quoting for various projects. Since being a new company, we are trying to associate with the bigger companies and also moving with our registration. Because first process is to complete our JV formation, documentation, and all that. And now we are looking at booking various orders. So next 2 quarters we will be seeing. Next 3 quarters we'll be seeing orders coming in from there, which are right now in bidding process.
Okay, sir. And just one last question. You mentioned that you are in talks with Reliance for the solar PV manufacturing. Is that correct? Could you give me some insight into that information as well?
So there is a clarity. It's not manufacturing. No. We are doing the EPC work for them for the solar factory which they are setting. They are setting. So they have given us the first phase of it. Okay, and there are other phases to follow. So we are looking at a good chunk of business coming out of the Reliance solar factory units which they are setting. It's electrification job of their own solar PV factory in Jamnagar. Hope we made ourselves clear, sir. Is that कुछ ही बराबर जवाब समझा गया? Hello.
Niket, sir, you're there online? We have another hand raised by the same name, Niket Shah, so I've allowed you to talk, please. Continue. We'll take the next question from Mr. Rohan Gupta.
Hello. Hello.
Good evening, sir. We can hear you.
Yeah, good evening, sir. Am I audible?
Yeah, yeah,
Yeah, sir, I have a couple of questions on the financials, right? So, sir,
yeah.
firstly, what is this other current assets of 117 crore that is sitting on the balance sheet?
That other current asset of 117 crores is unbilled revenue, which has been recognized as a other current asset.
Okay, so basically, this is, we can say, sort of trade receivables only, but we've not billed it, right? The milestone is completed.
Correct, correct. Work in progress, you can say.
But entirely is that, or some would be pertaining to, say, BG against the, sorry, FD against the BG or something like that?
Entire money, entire amount is towards that only.
No, entire is towards unbilled revenue or towards margin
Unbilled
money?
revenue.
Unbilled revenue. Okay, and we don't have any FDs, like हमें बीजी नहीं देना पड़ता है orders के लिए?
वो है वो क्लासिफाई किया हुआ है अंडर द शॉर्ट टर्म लोन्स एंड एडवांसेस सॉरी अंडर द शॉर्ट टर्म लोन्स एंड एडवांसेस एंड कैश बैंक बैलेंसेस.
अच्छा, उसमें क्लासिफाई किया है. Okay, okay, sir, got it. So what kind of margins are we expecting right now going forward? So I mean, we understand, okay, you mentioned the land acquisition uh, problems that were there with the client and all of that. But can we expect these margins to, go up back to, say, the 9-10% range, like EBITDA margins?
Definitely, sir. In the project business, any margin which is below, 10 to 15% is not justifiable. So definitely, there is a potential margin of 10 to 15% definitely possible. So we expect us to, in this financial year, for the gross margin to go back to its normal stage.
Okay, okay. And sir, the order book, right? The unexecuted portion is 331 crores. So what kind of timelines, like the average execution timeline will be, say, 18 months or so, or like what can we consider here?
So 12 months to 18 months.
Okay, 12 to 18 months. So we can expect a reasonable growth of, say, 25 to 30% this year.
So looking at the time that we are talking, I mean, we still have 9 to 10 months of this financial year. Well, there is a lot of potential order booking and execution yet to be done. So definitely there will be a revenue growth which can be expected.
Okay, so what is your, say, goal over the next 3 years? Like what kind of CAGR you are looking to grow at?
So we are looking at a growth of around 20 to 30% over last financial year.
Okay, okay. And sir, on this T&D order, right, that you have got, can you share some more details? Like what exactly is this? Because I mean, I read that it's written segregation of, some feeders. So isn't this a, say, a ground underground cable line or something, or what exactly is it?
Basically, overhead transmission lines. There are
Okay,
a lot of areas which are not fed through for electricity. So all the consolidation of electricity through transmission line is happening where all the power which is coming from the grid is fed to the users. So it's basically the end users who are going to benefit from these feeder lines.
okay, understood. So what kind of potential you see from, say, this specific area, like within T&D,
So
what?
I mean, we at this stage are looking at a massive potential. I can only say that Rajasthan has just one state has nothing less than 1,000 crore of opportunity available. And similar projects are coming up in plenty of other states.
Okay. But sir, considering so much potential, right? I mean, and why are we going for this Saudi JV and all of these things, that could increase logistics, that could In managing all the execution and everything for a small company like ours, it would be very challenging in my view. So, what is your view on that?
Uh, we always look at different geographies for a reason of getting better returns than what we are getting in our own country. So we expect the returns would be better with better profitability, bottom line.
Okay, okay. I
And
think that, yeah, please continue.
sorry.
Yeah, so sir, lastly, on these orders, right? Like you mentioned in the last financial year, we had this issue where, there were no escalation clause and, all of those issues. So for the remaining order book, like how well are we covered for these aspects? Say how many of our contracts are variable, uh, or they have the escalation clause? How many are fixed price? Can you give some color on that?
It's not about the escalation of clause which is available in the contract. It's about the execution efficiency which is going into this picture. So mainly all these contracts which are there, whatever happened, whatever unforeseen situations happened last year, they are a very rare scenario. They do not occur every time. So stalling of projects, they just happen like one of 100 projects that is there. So that basically led to the dip in the revenue and hence the profitability.
Okay, and is that why our unbilled revenue is so high?
Yeah, that is the reason, sir.
Okay, okay. Sir, you can give some details around that project, like which project exactly, or that you won't be able to disclose?
We can. It's very difficult to disclose those projects, sir. I mean,
Okay,
for
but
confidentiality reasons.
okay, so but this was around which sector, like refinery or which
Another
one?
another important thing I'd like to say is last year, there was an election year last year. So what happened is all the projects, all the decisions were pending and they were deferred decisions. So they had to take some certain decisions. They waited for the election for the new governing body to come. And now that the new body is there, the new decisions were taken and to revive some of the projects which were under the dead state.
Hmm,
And
right.
this
Okay.
will get revived in these coming years.
Okay.
It's
Okay.
every 5 years when we have election. This is the problem. All the even the funding, even the spending gets deferred.
Right. Understood. Understood. Okay, sir. Thank you so much. I think that was it from my side.
Thank
All
you.
the best to you.
Thank you, sir. We'll take a few questions from the Q&A tab now. I'll just read out the question. The first question is from Mr. Jana. Could you elaborate on the company's future strategic outlook, the size and composition of the current order book, and the primary factors that contributed to the recent dip in profitability?
I have already answered this question. Our order book size today, unexecuted portion remains at 389 crore. And the dip in profitability, as highlighted, there were two or three reasons which I showed in my presentation. One is, few projects, around 20, 30 crore of revenue we could not book because they got stuck in between. And however, that that time we have new projects which have come up and we have secured that project. That is a deferred revenue which is going to be coming this year. So these are certain reasons which led to the dip in the profitability. However, we expect the profitability to come back to improve because a lot of projects are coming right now in the two-wheeler. So without incurring the cost that has been already incurred last year, this year there will be revenue recognition and we see a better profit margin coming in this year, this financial year.
Okay, the next question is from Mr. Amit Sagar. The question is, Konstelec has a relatively small base of around rupees 105 crores and operates across multiple domains and geographies as per the investor presentation. Despite a robust order book and global presence, the recent financial results have been disappointing with execution challenges cited as a key reason. Given these execution issues, which seems to be impacting margins and project timelines, could you please elaborate on the specific steps that the management is taking to improve project execution efficiency? Additionally, how do you plan to ensure that the current order book, especially the unexecuted 389 crore portion, with ongoing client related delays and cancellations affecting cash flows and margins, what is your outlook on stabilizing margins and improving operational cash flow going forward? At such a low base, the only sustainable way for Konstelec Engineers Limited to grow and become bigger is through effective execution and timely completion of projects. Successful project delivery will improve revenue.
Mr. Jigar Shah, who is the CEO of the company, would take this question and he would highlight certain points on this subject. He is now taken over as CEO who is effectively now managing the operations. Since the point discussed here is operational efficiency or project execution efficiency, he would have a lot of insights on improving the same.
For the drop in turnover, already it has been discussed and highlighted to everyone. I would like to point out few things here for everyone to know that the mitigation measures that we are looking at so that this unexecuted portion is completed on time, which will help us in deliver the projects. So one of them is, accelerated closure of these projects is what we are targeting this year, so that we are able to complete those projects and come out on time and get the revenue recognition. Extended delays which are happening right now, we are trying to flag those extended delays to the client through various avenues, through various letters or any means that we have. And with clients where we are able to get escalation in place, we are able to, put that forward that due to this extended delay, which is not accountable to us, we're able to do that. And at the same time, we have brought in the dashboard for monitoring and better delivery of projects. For that, we have, as one of the point is to have a new team infusion, which we have done at this stage, so that the payment revenue recognition happens for us. So these are some of the pointers that I'm trying to point where a young team will now work towards a better delivery and improving the efficiency of projects. And where we are facing challenges due to the reasons beyond our control, we are trying to work around with clients in terms of extended say compensation or some kind of amendment, or if it's a government project, we try and look at reduce our cost. We try and bring down the cost at this stage so that we then go back to work over there when the project opens up when you have governmental delays. So I hope this will answer the question raised here in the forum.
Oh, thank you, sir. The next questions are from Mr. Nikesh. I can read out the question one by one. The first is, any plans of tying up with a non-electrical contractor, for example, civil, to bag entire projects?
Now, where we are working, their civil portion is coming into our scope, okay, and we are trying to do that tie-up, especially in government projects where substation work is involved. So that way, we are trying to build our pre-qualification and then move towards these kind of bigger projects. And for Saudi, we are looking at this year, we have good amount of bids in the pipeline. And we are looking at, around 5 to 10 million Saudi Riyal of work to come to us in this next 3 quarters. And about data center, we are still trying to explore. It is still work in progress, for which we will give you update as we move forward. And for railways, as we have already identified, we are doing an MOU to move forward in railways and bid for projects in railways. I hope I have answered those four questions which are raised.
One thing is that the bid pipeline is for the domestic bid pipeline is around 1,000 crore of bids are in process. Point number two. And what portion of the bids for Saudi, 3 to 5 million, we are targeting, or
5 to 10.
5 to 10 million worth of bid pipeline is there, and where we are targeting 3 to 5 million of work, which would come to us in this financial year.
Okay, sir, we'll take the next question. From Mr. Rohan Gupta, how much revenue have we done in April 25 and May 25?
It will be very difficult to disclose the revenue of April and May
At this stage.
at this stage. However, we would do it on a quarterly basis or a 6 month basis, which would come in the public domain.
We have the last question, and it is more of a suggestion. Considering that a 6 month reporting period is quite long and may delay timely insights into operational progress, has the management considered moving to quarterly financial reporting? This could provide investors with more frequent updates on project execution, order inflows, and margin improvements, especially given the current execution challenges and the need for greater transparency.
We are working with our compliance team. We are working with them to get this information out. However, we see that this information would be happening quarterly from next year onwards, next financial year onwards.
We'll take the next question from Mr. Jignesh.
Yeah, hello. Am I audible?
Yes, sir.
So, sir, as you mentioned that you have entered new area of transmission and also you've entered new markets. So, going forward, do you see any specific challenges initially to gain traction in both the markets that will keep suppressing our margins at least for next 1 to 2 years?
Really, when we have entered these segments, we've actually assessed this and done due diligence before getting into these segments. So for all other segments, we are doing enough of pre-work analysis to understand what is the revenue and profitability that would come in each of these segments. So that itself, before deep diving into any of these sectors, we need to understand their profitability and the models in which each of the industry is working, which we are doing it in-house, which we have some special team which is assigned this activity to study the feasibility of every industry.
Right. And since there is a lot of opportunity in case of renewables, especially BESS and even transmission, so how do you see yourself positioning in both these sectors in coming 1 to 2 years in terms of order book?
It's very difficult to quantify it, but there is always one endeavor that in the transmission, if you want to walk up the ladder, you should get into EH segment is 220 kV and above. So that's where our aim still remains, is to get into a 220 kV segment in the years to come. Then you see a lot of other big size projects available for people like us to bid for. So that remains our endeavor.
So yeah, thank you, and looking forward to seeing improvement in ROE in coming 1 to 2 years.
Thank you, sir.
We'll take the next question from Mr. Miten Shah.
Yeah. So my question would be like, of all the projects that we have in hand, how much is a contribution from government capex projects or government funded projects, and how much would it be from private?
50% from government and 50% from private.
Yeah. And how are the margins typically between the two? Are they similar or would it be different?
Sir, it depends on the nature of the project, on the geography of the project. It does not depend whether it is private or public sector largely. I'm talking about us. It may be different for different people. But for us, the location does matter, the logistics does matter. And, there are certain local players who are there who probably are securing or winning the jobs in certain locality. So our competition is with the local players. So you can't compete with those guys in certain states. So there are these criteria which are there, which we evaluate properly before we deep dive into bidding for the project. To understand a project, to understand revenue building and understand profitability in each of the states.
Correct, correct. So my subsequent question would be like, how is the debtor days or the working cycle in each of these verticals? I mean, which one is better?
Sorry. Sir, roughly, if you would say, there are different challenges in both of them. If you have all the documentation and everything perfect, government, I would say, has a better cash flow. Based on the situation or the industry impetus on infrastructure and cash flow, I would say sometimes even the private sector has a better payment cycle, or generally they have a better payment cycle. So it is again something which is very relative.
Got it, got it. Okay. So my next question would be like we are now setting up in Cameroon and as well as Saudi Arabia. Is there any finance required to fund these projects? And how do we? I mean, my question is, how do we execute? How do we proceed over here for these projects, for these JVs and new projects? Any additional funding required for these places?
Well, as of now, we do not envisage any additional funding requirement for these projects. It will be funded by internal accruals only. As of now.
Okay. 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 And the only question is this: what is the management? How does it think about increasing the ROE and ROCE? If you see the ROE at 4.93 and ROCE at 9.13, is there any plan to increase this matrices basically, which will improve the financial metrics of the company?
ROCE return is only profitability, right? That bottom line is the ultimate, whether you call it ROE or ROCE, if you improve your profitability, all these numbers would definitely improve. So our focus remains profitability at every stage. So we do not, we try to stay away from projects which are minuscule in size, which are not profitable, which have a lot of problems associated with it, which hits our bottom line. So we get into projects and we are slowly moving into large segments. So that also in the larger segment, you have lesser competition which is there. So the profit margins are healthier when you move into the large segment. So our qualification in various segments is different now that we are able to bid bigger size projects of 100, 150 to 200 crore projects where you have a relatively lesser competition there.
Got it. Got it. Got it.
So this will lead to better profitability.
Correct, correct. And how do we protect margins, in case of any price escalation in the commodities?
So generally, when we bid for the project, I think we ensure that plus minus 10% margins, variations are taken care of during the bidding stage itself, because most of our contracts are fixed rate contracts. They do not alter during the stage of the execution. So
Correct.
that has to be ensured.
Okay. Okay. All right. I mean, that's all from me. I really appreciate for answering all the questions, and thank you from me. Thanks. So thanks a lot for giving the opportunity. Wish you all the best.
Thank you.
And just one question. I mean, out of the 1,000 crore pipeline, how much of that would be L1?
Sorry.
Out
So
of the 1,000 crore.
they are under evaluation stage, sir.
Okay.
They are under evaluation stage.
Okay.
They have been technically evaluated. Some projects, their commercial bids are under the opening stage. So it's very difficult to tell you how many of them are L1.
So as of now, when we speak up, what is the L1 value?
Sorry, L1 value, there is, as I said, they have the evaluation. 1,000 crore bid pipeline
No,
means
not for the 1,000 crores. In general, I mean, as of now.
sir, nothing. Whatever L1
Okay.
has been informed to the exchange accordingly, sir.
Okay. Okay. Got it. All right. All right. Thanks. Thanks a lot once again, and wish you all the best. Really appreciate.
Thank you, sir.
We'll take the next question from Mr. Niket Shah.
Hi, I wanted to ask, is it possible to meet the management like investment purposes?
We would structure the meeting accordingly, and we would definitely open the doors. We will give a slot through our mail, and we can have a meeting accordingly, sir.
Okay, so is there anyone that I can get in contact with
Also, you
Yeah.
can
to schedule the meeting? That is.
Compliance, there is an email ID of compliance@constelec.com. You can write to
Okay,
this email ID, he will respond, sir.
perfect. Thank you so much. Thank you so much.
we have a question in Q&A tab. What is our bidding eligibility in the various segments, refineries, T&D, etc.?
T&D is just a starting phase, where a beginning is being made. 25, our eligibility is to bid up to 75 crore in transmission and distribution. In refineries, electrical and instrumentation works in refineries, we are doing today, we are executing around 100 crore of single order value. So our eligibility remains up from 150 to 200 crore eligibility in refineries. Single project of 150 to 200 crore in refineries.
Do we have any other question? If anybody wants to ask, please raise their hand. We got a question. Rohan sir, it would be better if you raise your hand. I can unmute you and you can ask questions directly. This question is, who are our main competition for refinery projects?
Sir, we have, I think this competition is a very dynamic situation. Sometimes we are also competing with likes of L&T, Sterling Wilson. There are some smaller players who are there, Sterling Electro, Praveen Electricals. They are doing small size projects. The bigger size projects, you have competition in the larger segment by L&T, Sterling Wilson, Bajaj projects, I mean.
We have one more question. Revenue guidance for FY26.
We expect a definite growth from last financial year. We definitely look to. We made enough of preparations, plans, and structured ourselves to have a robust growth in this financial year.
We have question from Miten Shah.
Yeah,
Yes,
thanks for giving opportunity once again. So of all the verticals that we mentioned, which vertical offers the best margins?
I think this is it's not a. I think I don't want to disclose this kind of a business specific question, sir.
Okay. And would it be possible for us to get an idea on what margins are we expecting from Saudi Arabia projects? I mean, would it be better than what we'll be doing it over here, or how
Yes,
would it be like?
definitely. Yes. That is the reason why we are venturing into different geographies, sir.
Perfect. Makes sense. Yeah, that's it. Thanks a lot so much. Thanks once again.
as there are no further questions, I would now like to invite the management to share their closing remarks.
Thank you all. I hope you are all satisfied with the various questions and answers. Although last financial year was challenging in terms of top and bottom line growth, whose details already shared by my colleagues. However, I personally see this year as a turnaround for this fact that several projects are getting completed during this financial year, besides venturing into another separate verticals. Once the project gets completed, our profit also gets unlocked. That's the major reasons. The new verticals that we are envisaging during this financial year, as already discussed, T&D, Saudi Arabia, solar, renewable, and railways. And I'm sure they will all contribute to a larger turnaround for top and bottom line. I'm seeing the great future for Konstelec. Thank you, everybody. Thank you.
On behalf of Konstelec Engineers Limited, we sincerely thank you for your time and continued interest. We appreciate your participation on today's call. You may now disconnect. Have a great day ahead.
Thank you.